Yo, yo, yo. I'm thinking something like this. But we'll see. Like, he'll be ideal. What's everyone saying, man? I'm waiting for some shorts in UCJPY. GU longs have just been missed in that, if I'm being honest. Like, just missed. Like, yeah, GU longs completely missed. I predicted it, but I just didn't think this was going to be the launch pad to go up. Okay. That's why reaching a key market driver area, inverse liquidity. Yo, what's everyone saying? Is anyone anything? Me, I'm just waiting, but yeah, I want shorts. I want this to drip. Yeah. Okay. Yeah, man. Today, who we got speaking? Someone's speaking today. Is it Fed Powell testifies? A man is testifying. What are you snitching about, mate? Yeah, 3 p.m. I'm gonna be in before then, if I'm being honest. Should be anyway. I haven't taken a trade all week. Ah, it's JPY bank holiday. Interesting. GU, EU. What is it gearing up for EU sales? I don't think. Maybe. No, you know what? I didn't even deep that. Okay, cool. Now I'm deep in it. The DXY. That's a 4 hour impulse. Let me show you. Yeah, we're at a 4 hour impulse, so I think we'll push back up. So what? But I can't see. I can't even see. I can't see longs here really. I mean, it's possible, but it's possible. Shorts. UGBP. Yeah, shorts. Yeah, it'll be EU shorts. So if you look at EU 4 hour my bad. EU 4 hour impulse. Maybe a 1 hour sweep. Depends. Yeah, before any shorts done EU, I need to see some movement downward south. But I would say if DXY was to push up, then I'd want shorts in EU. You know? Yo. We seen abs. Right now, I'm just trying to see what price wants to do. Waiting for Powell. So wait, you waiting for him to speak fully, and then you jump on. But I was looking into it. He's testifying about something, but like, I was just, yeah, this guy's testifying about the monetary policy report. Oh, I swear, he made some comments. So he's gonna get his get back and just say what he thinks. So it could be some wild stuff said, isn't it? Yeah. But in the meantime, yeah, I want sales, but I'm not gonna rush into it. So that even like I have no limit, but I'm just assuming this is like a nice area to get in. But right now, I'm watching. Oh yeah, the rate cuts is very important. What are you gonna? Are you actually gonna watch it? Like, are you actually gonna watch and listen? Yeah, I guess it will. Because a CME Group FedWatch tool shows that the market price is less than 10% probability that the Fed will lower policy rate by 25 basic points. You gotta watch it. Damn. Damn. No, yeah, that's serious. Yeah, no, I mean, I'll join you, bro. I'll join you. I'll join you. Yeah, Gov Bailey, yeah, he didn't say anything major. Did you watch that one? That one I didn't watch. I didn't watch. Prices entering a nice area in UCJPY. I've not got a limit. I just want to see how price reacts to this area. Like, will it respect it? Will it reject? You know, so. Okay. A jump up, guys. JPY bank holiday. Wait, let me check. Hold on, let me check GBP because I swear it moved though. Yeah, but I hear bank holiday, but it still did a madness. That's quite mad. Like price is pushing. Free signal. No, don't take this signal. This is just what I'm expecting, but I'm not in this trade yet. I'm trying to see how price reacts. I'm not in this trade. That's why I don't set limits because sometimes it can just blow through a level. But Okay, yeah, I think I'm bearish. I'm bearish. Yeah, I'm bearish. Alright, let me get in. It was two, three. I'm pretty sure. Yeah, I want to see yen switch bullish as well. Actually, yeah, it has been going down. Yeah, you're right. No, you're right. Um, cool. Man is in. I'll put my entry. Hold on. 152434. 434. My SL is 519. And yeah, cool. I'm lit. I'm in. Yeah, entered. Yeah, entered. This is my exact trade. I'm gonna go hold through news. Yeah. Obviously, I'll go break even. Um, yeah, I'll hold through news. I'll hold through news. I want a bearish dollar. That's the aim. I want a bullish JPY. Yeah, so that's my aim in it. But yeah, my stops above the high, 8.5 pips. Um, yeah, I'm learning. Stop above the high. But yeah, let's see what price does and yeah. Mizzy. That's a good reaction. Yeah. Yeah, it is a good reaction to be fair, I can't lie. It is a good reaction to be fair. I'm not gonna lie. That was a good 5 minute candle to be fair. That was a good 5 minute candle. If it rates 152.26 BE, yeah. 0.26. Yeah, 0.26, 0.24. Yeah, break even. Yeah. Um, maybe even zero point 0.3, but probably 0.24. let me just clean up my chart quickly. Okay, no, that's clean. 30-minute. Okay, 30-minute actually closed pretty well. The 30-minute did close well. Wow. 15-minute, decent. Yeah, cool. Wow. Okay, this is moving. We're 1 hour up. Let me check. GBP JPY. Okay, cool. Yeah, that's 1 hour. So yeah, right now just chilling. But obviously the first target is these lows, you know. So what's that? 0.25. But I'm so bearish DXY, like I'm so bearish. I'm so bearish. Trade's going well, yeah. Yeah. Let's see how we move around this area. This area is interesting. So, yes. Okay, cool. News 3 p.m. Yeah. Yeah, I'm aware. Obviously, the aim is to be in decent profit by the time news comes, and then hopefully, news can aid my trade. I will, yeah. If I'm in decent profit, then I can at least go break even or something. This 1 minute candle's quite reject. It's quite a rejection. Hold on. Let me. Why do we think DXY bearish? I just think it is. The 12-hour. There's a 12-hour sweep. There's a 12-hour sweep. Actually, it was a 12-hour sweep. So, but it wants to reverse now. Yeah, those 1 minute candles were rough. But this, hopefully, we can react off here. We can come back down. That would be nice. Okay, all the way back to break even. Let's see if we can react off this level and push back down. Let me check if. Okay. 120. 145. Okay, cool. Let's see if we can push back down. That'll be appreciated. BTC. I was before testing some BTC longs. Went up. Came back down. EU pushing up. So then I guess obviously in that case it would be GU longs, EU longs, but like it's hard to get in. I feel like because I was looking at it here, but I just didn't. Now I can see as an entry, obviously in hindsight. Yeah, GU and EU, I think bullish right now, but it's just that like since it's so high, I don't know. It's just hard. I mean, unless you do like a little break and retest type thing, but nah, I'm not really feeding it. Um, but yeah, I'd say I'm bullish, but it's just that I feel like you had to like get in a bit earlier. It's hard. Is that a premium right now? You know, in compared to like where it's been for the day, I just find it so hard to buy again. Like here was cool to buy, but so yeah, because yeah, if I'm in UJ cells, then I want these lot to go up. But I missed GU long, so I'm not in anything. I keep stretching. Do I need it that bad? Alright, cool. Okay, let's stay rejecting and come back down. Of course, I'm bullish. You're on EU shorts. No, I mean shorts is possible. I didn't say it's impossible. It's possible, isn't it? But but I'm bullish though. I want a bearish DXY. So if I want that, then what does that tell you about what I'm looking for? But wait, shorts. You call the top then? If you want shorts, you're catching the top, like the tippity top. You know. Mm, mm. How am I up? Wait, how am I up? Like, um, flipping. Let me actually look. No, I see why you want UJ buy GU sells. You want UJ buy? No way. No way you want a UJ buy. You know what? I can see shorts. Obviously, I'm not playing with GU right now, so that's why I'm not. I said I want the buys, but I wouldn't get in buys. So yeah, shorts can work. It can actually work. Like I'm not saying it's impossible. I never said that. Actually, you know what? But yeah, anyways, before doing any shorts though, like I need to see something like that. Wait, not that. I need to see something like that. Do you know what I'm saying? I wouldn't even. Okay, UJ's going well again. We're back down, which is great. Yeah, if I wanted sales, I need to see like okay, at least yeah, break below this low. Just break. GU actually not even. To be fair, EU shorts. Yeah, well, even EU shorts that's even harder to. Yeah, no, for me, yeah, oh, I don't know. But let's see though, innit? Let's see. Yeah, no, I mean, to be fair, we already broke structure on GU. There is no need to go all the way up, but news might pull price to the 50-minute imbalance. Okay, yeah. I mean, no, you know what? Obviously, UCJPY is kind of in its own league, like, because obviously the yen is also impacting it. So like, even though I want bearish UJ price action, sometimes DXY can do its own thing. But let's see. I'm interested at this level. I'm really interested. If we can break this level convincingly. Okay. Okay, I've got too many red lines. Let me clear my chart, because yeah. Oh, you're in shorts, bro. I mean, obviously, I see some sweeps. Like, it can work. Let's see where the 15-minute closes in the next minute. Sorry. Let me put that there and then there. Yeah, I'm interested in a 15-minute close. I'm very interested. Oh, my TP isn't here, by the way. This is just like my first like target kind of. I might take some partials. I don't know. Okay. Good day today. You think? 15 minutes. We got my man speaking. What's his name? Powell. Good morning. That's the type of thing he's on. Okay, so right now we're approaching 1 to 2. Okay, right now we're currently 1 to 2, I believe, but I'm not 1 to 2. That's the issue. Wait. Yeah, where's my wrong? Wait, did I do something wrong? Why is my... you know what? I know why I'm not wanted to. Yeah, I know why I'm not wanted to. Yeah. But my SO, you know what? It doesn't even matter. I don't even care. Yeah, I didn't work out my risk properly. Basically, my SO is... This is my actual true SO, but like I calculate my risk as if my SO is 10 pips. But by the way, DXY is looking... I don't know. I'm watching it carefully, you know. But yeah, no. I'm watching it carefully. But like on my challenge account, I didn't I definitely did not like do it properly. Yeah. Alright, cool. How much have I got in funding? 50k. Right now I've got 100k phase two. I'm in drawdown, but I need to sort that out. And I've got 100k phase one. I'm in drawdown, but I need to do. Yo, DXY is dropping like crazy. Oh yeah, let me send this guy. I actually this guy. Yeah, see, this is why. Look, this is why. Like, you see this? It's just violating. You see how price is just violating. And then DXY is melting. But I need UJ to make some moves. Okay, 5 minutes about to close. Yeah. You're retiring from Forex? No, you're not. No, you're not. No way. 040075. How did I learn how to trade? Through taking L's. From taking L's on live stream. US equities only from this point onwards. Bro, it's only one loss, man. Like, bro, one loss shouldn't be the end of the world, you know? Am I gonna plan another trading event? Of course. This year. This year. Of course. There'll be money to be won. There'll be trading accounts to be won. It'll be crazy. It'll be crazy. But like later this year, man. Later this year. Give me some time. Let's go. Let's go. Let's go. Hold on. Let me just send someone bread. Then why are you on UJ if EU and GU are smooth? No, no. I was predicting GU longs, but like I just didn't like. I didn't like this price action to enter. And what I noticed, yeah, one thing I noticed is that like since I only trade GU and EU, if the price action is dead, yeah, I'll still kind of force myself to get in a trade. But now I got a UJ. UJ was looking a bit more cleaner. It was looking cleaner. So I was like, so now I've got freedom. Like if the price action is dead on EU, I don't need to force myself. I don't need to force it. I don't have to force it. Like I know it was bullish, but I just didn't like how high it was. I know that sounds weird, but I just didn't like it. You make a train start update and something bigger's coming. Yeah, bro. Yeah, Calais, you got in down here. You got in like here, and then came out around here, and it's gone here. But I mean, you still did well. You did well. But no, GU. I think you know what it is, yeah. I think with GU and EU, have it there. It can be smooth. Like, bro, today, bro, look at today. Like, let's not lie. It's gone up 70 pips today. Like, it can be smooth. It's just that sometimes it's just not making sense, isn't it? The EU, there's EU on the 1 hour. Oh, yeah. Okay. Yeah, I see what you're saying. I mean, hey, my man's gonna start talking soon, isn't it? Yeah, cool. Okay, yeah, no, if your method performs way better there, then fair enough. Because I know you enter a lot of trades in a day, so I understand that. Yeah, but yeah, let me know, cause. But then again, have you thought about trading futures? Because I think even futures is better for your strategy. I think. So what I was saying was, I can possibly go break even if we break this level. That's what I was saying earlier. So it's interesting. It's an interesting level. If we can break it, 15-minute closes in 5 minutes. 30. Okay, everything closes in 5 minutes. Cool. But the 5 minute closes in 30 seconds. So yeah. Okay, the 5 minute did not close below. So I'm still watching, but let's see what price brings. Wait, 1 second. 1 second. 829 355 48. 829 355 48. crude oil, XRP, and BTC. People should look into that to trade. Obviously, it has to be a broker, not prop firms, because crude oil is and it's crazy smooth. Yeah, BTC. I was full testing some longs, gone to profit, and then stopped me out. But I probably would have been break even in a real life example. But I was full testing some longs. But I play around with BTC, man. I play around with it. I play around for real. Okay, price is rejecting off this level. Swing trading. Oh, this 15. Okay, if 15-minute closes like this, I will definitely go break even. Definitely. Like, definitely, yeah. Because that's not on. That is not on. News is in 2 minutes. 30 pip a day, does that mean I swing trade? No, I still day trading, I think. I think I still day trading. Hey, what's it? Where is I wanna listen to this guy talk. I wanna listen to Fred Powell. He testifies.
Going Neil. There it is, Neil. Let's go, Neil. Come on, Neil. Get on that horse, Neil.
What the hell? Wait, sorry about that. Cool. I think I got something loaded. I think I'll go break even now, cause yeah, no, that 15-minute close. Nope, not on my watch. Yeah, not on my watch. Cool, I'll go and break even, cause I don't like that. But let's see though. Hopefully we can continue going south. That would be appreciated. But yeah. Yep. Okay, this is wild. Yo, this is moving quite wild. I can't even lie. Wait, I don't get, why is the price moving? He hasn't even started speaking yet. He hasn't even started speaking yet. Why is it doing that? Look at that 1 minute candle. Like, he has not started speaking yet. Why are people trading erratically? Like, yo, Like, I've literally got it up here. He's not. Oh wait, is he? No, he's not even speaking. Like, I don't know where people are even mad, fam. He's not even opening his mouth, and people are just scared, fam. No, that's mad. Anyways, I'm gonna break even though, so. I'm gonna break even though, so yeah.
Reserve is supposed to be an independent institution
guys.
free from politics. But in recent reality, the Fed has been susceptible to political pressure. Take, for example, the Fed's involvement in the Network for Greening the Financial System, a group dedicated to green financing and climate change, which the Fed joined in December 2020 as President Biden was about to assume office. Just last month, the Fed announced that it had pulled out of the organization as President Trump was getting ready to be sworn in. To the American people, this is flip-flopping in the political wind. Too much focus on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB. How can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it.
Any higher?
For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I would simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans in Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you are now recognized.
Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady
I'm
now
out.
since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups.
So it's going to happen now, you know.
Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell. Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve's supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who's spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and with the number of MRAs that went really documented, but no action was taken, that leads me to the conclusion that individual employees, supervisors.
Now, I was saying, this is why I went break even. Yeah, no, I get you. Yeah, this is why I went break even. Because of this.
Do not impose more burden than is necessary. And I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
Right, first of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn over to the ranking member. I'll say this, after having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from the CEOs is that the regulatory OCC and other regulatory agencies said specifically to debank certain industries, and that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman. So over the weekend, Co-President Musk and Acting Director Vogt effectively shut down the CFPB. No more cop on the beat looking out for a family of 4 in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec, but the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to Co-President Musk and CFPB Acting Director Vogt, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks, or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vogt, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the
Learn my strategy. I have a Discord. You won't be able to learn my strategy. I'll be releasing a mentorship soon. I'll be releasing a mentorship where you can learn, but obviously it will cost money. But that's the Discord, so at least I can show you my trades. As in, you can't enter trades.
in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agree with you. But several weeks ago, the Fed announced
Really? Well, yeah, when I do release my mentorship, there'll be one-to-ones, weekly Zoom calls. There'll be I have a school platform where I have all the videos where you can learn exactly how I place trades and the confluences that I use.
The changes are changes you've identified earlier as making those tests toothless. Look, big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Thank you. Senator Rounds?
Thank you, Mr. Chairman. And Mr. Chairman, thank you for coming before the committee. I appreciate the opportunity to visit with you. I've got a series of questions, but I would like to give
Bro, this is long, you know. Bro, that court case, fam, he's in trouble.
the big banks can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there,
Like,
anything along that line?
bro,
Law changes? No, I'm not aware of any changes, any rules that they would have to follow.
tomorrow we got CPI as well.
Audited and still
I need to be in a trade in London so I can catch CPI.
businesses just as they could before.
They'd have all the regulators except for the CFPB, because if in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on? Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks, it's good for our economy, that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. And I think we can do this reasonably quickly, one that is compliant and consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing on the quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks, and I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, suggested
Damn.
bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area.
Our expectation would be, and the markets would expect that it would be neutral with regard to capital.
In that range, but I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable
Trump is speaking today. When?
high volume of daily transactions?
No.
So it's a complicated set of arrangements, and I'll try to summarize it quickly.
Oh.
Effectively,
Yeah.
there's authorized
Yeah. Stay out the market. Stay out the market.
And the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the
he's gonna speak.
pay list and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is.
It doesn't say a time, but he's gonna speak today. Oh, by the way,
Resilience and all those things of this system, and people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this, it cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised, yes. I can go into some details. I mean, one thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. Yeah, but a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet. And I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you, and thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern, and you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With the CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under $10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection, that would be CFPB?
Yes.
Okay.
That's
And
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer
I'm trying to
exists,
get the link.
what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some
And
financial
that's
market
it.
utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe so.
And you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has $10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true, and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to
So try
consumer
that one.
protection. Is that, would you say that's true?
Try this one. Try this one.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government. And listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to
Yeah, guys. Obviously, I got in trades. It was at 1 hour, and then break even. Yeah.
And just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and even for the banks at the CFPB. Thank you. Let me ask you this, and we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy.
I have a lot of experience. A lot. 8 years experience.
But there are
Look.
most in my home that are in my state that are waiting to buy a home. And we know that's still an issue, the high prices right now for home affordability. You add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that? So overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, quite a low level.
I think SMC.
6% for the year, so we're in a pretty good place.
I think SMC.
We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates will remain high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. Those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places. Thank you. Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being
ICT is also good as well.
my friend, our ranking member.
Trading View just tells you when you create your account. It doesn't mean you have experience. You're right. You're right. So when I create this account, I'm not gonna lie. I won't say 8 years experience. I started getting serious with trading in 2019. So I would say 6 years experience.
Picture should not go.
When was the last time I won a trade? I won a trade today. Oh, I hit break even. I hit break even today.
Inflation was raging.
Obviously, as you can hear in the background, there's Fed Powell speaking. That's why I went break even. Look.
Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into a recession in order to.
So yeah, obviously I went break even because I knew Fed Powell.
Very, very well.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
Break even isn't winning the trade. Yeah, you're right.
How about China?
You got to be hitting the 1 to 3s. Yeah, I was close.
How about France?
I was close.
Thanks.
But what's it? You gotta respect this because this is basically protecting capital.
Perfect. Inflation's obviously
I protected my capital. I could have had the L.
which I want
You know. Who do you recommend I learn from? TJR.
fact is,
I learned from Baby Pips. But yeah, you can learn from TJR.
a soft landing happened.
Not for me to say.
Or you can learn from me, but like not now though. But in the future.
Experienced a hard landing,
But right now,
recession.
I feel like longs will come.
And it seems to me that you and some of the ladies and
You've already watched it, then what's the problem?
colleagues at the Federal
If you've already watched it, you should be calm
credit for that.
at trading.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does. Okay, I'm not saying things are perfect, but
I let my trades hit my SL. If I leave early, that means I was never committed to the trade. I agree with that, but it's just that I don't trust Fed Powell. When he speaks, it always messes up my trade sometimes. If I was in deep profit, I'll let it run. But I wasn't that much in profit. I was not trying to let this guy ruin my trade.
president on the fiscal side. I don't expect you to comment on that.
You don't know.
Federal Reserve can't
And then yeah, I don't know. Maybe you need some one-to-ones.
short rates, can't you? Yes. Through the open market committee. You can't control long rates, though, can you? No, you can't. Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain um, when we do these decompositions. And so, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to
One trade in January.
explaining to the American
I need more than that. But I know people that take a few trades in January. Like, I can't lie. This Trump, I won't lie though. This Trump economy, things have been different, bro. Short and GU soon. I hear that. I hear that.
spouse. Said,
I'm not sure now, but I think actually, would I short GU soon? I probably short EU, preferably, but
worried about their reputational risk because they don't like our politics.
yeah, I'll short. Is it SMT?
Do you think that
I, currently 1 hour SMT. I'll show you.
As I mentioned,
Look, this is the 11 a.m. Monday high. 11 a.m. Monday high has been swept. SMT. So the one that's been swept, I'll short EU. Because also with Euro GBP, I'm expecting Euro GBP to drop. So go up a little bit more, and then bam. That's what I'm expecting Euro GBP. So 4,350 is your target. What is that? For what? Wait, 4,350. Wait, what? Wait. What? EU? But yeah, nah. EU shorts. I'm on.
I've asked our chairman and he's agreed to invite some of the CEOs of some of the banks that have been debanking people. And the CEOs,
It was 4,350 though.
not the PR,
Oh. No, what do you mean? 4,350. You mean high?
the CEOs to come in and let's talk about
4,350 is up here.
what the hell's been going on.
Bro, these guys are still chatting, you know.
Thank you, Mr. Chairman. Senator Reid. Thank you, Chairman Powell, welcome. I think your monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference. We've avoided a recession. I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%.
Oh, you want it to go higher? Oh, okay. Oh, I was talking about right now. Not right now, but like, for me, before I short, I would like, I need some downwards movement though on it first, but.
And that's a combination of your work together with the fiscal policy of the Biden administration. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and have higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on
Bullish.
looking at them on a case-by-case basis, and if they really do transfer risk successfully, then that's okay. I mean, it's a good thing if a bank wants to transfer risk off its balance sheet in a way that gets compensated for and all that. But what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis, is sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfers, as was the case with synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage. Of course, housing is difficult. Two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, sir?
Do I trade gold? Nah, I don't. I trade EU, GU, and UJ.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
It's really a question for you. I mean, putting them back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate it.
Thank you, Senator Ricketts.
Well, thank you, Mr. Chairman and Ranking Member, for holding this important hearing, and thank you, Chairman Powell, for being here today to talk about our economy and all the things that are going on. I want to address, again, something that the Ranking Member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of Banking that reported to me, that if any consumer would contact us and make a complaint about a bank, even a big bank like JP Morgan, we would investigate it, as could the OCC, the FDIC, and the FTC. So to characterize that nobody's out there looking for consumers, I think, is inaccurate.
Right now, I'm chilling. In terms of what I'm looking for, though,
Right now, that somehow
I want
the case, because
DXY bullishness now. I wanted bearishness, but
consumer, please reach out to your state Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for consumers. One of the things that
because I want to see sales.
consumers is inflation. Prices under the bite of inflation were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected. We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect that that's part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to
Cool. The 2 hour closed. So GU failed to sweep this high Monday the 10th of Feb, 10 a.m., which is yesterday. Whereas EU swept the high. So that's SMT. That's called SMT. Also, DXY, we touched 4 hour level liquidity. 12 hours as well. I can even make that blue. 4 hour. So I'm expecting upwards movement. Pow. So, but obviously not right now though. But I want to see upwards movement. Me personally, I think EG go down. So that's what I'm expecting. So therefore, on EU shorts, I want UJ longs. UJ longs. But I don't know. UJ longs is techie. UJ longs, it's techie. It's techie. I only get UJ longs if like price comes at down back here, maybe. But yeah, UJ longs is techie. I rather just do EU shorts. EU shorts got the most confidence for me, so that's where I'm at. Shite. You hear that? Stable coins.
A safe and sound manner, and a manner that protects consumers and savers and all, that there be a regulatory framework. So we see these bills, and we're in contact, as we were in the last Congress, and trying to add our technical thoughts and how to do this. And we think it's a very constructive exercise.
Well, we do think, you have a lot of expertise in this session, and there are people come with lots of opinions on everything in crypto, from over the top to the other end of the spectrum, and I'm gonna need to rely on your expertise as well as we try to work through some framework for stable coins. I know there are a lot of earlier questions on CFPB. I think the record is pretty darn good. It's returned $20 billion to consumers. Matter of fact, the last time we had the previous chair here, Chair Rohit, Ms. Chopra, we were talking about $55 million to Virginians. I do have to mention this more for my colleagues. Tim Kaine and I did a teletown hall last night. Lots of things happening in Virginia. Normally we would get maybe 3,000, 5,000, 6,000 folks on a teletown hall. We had 60,000 last night. I have not seen anything like that in my time up on here on the Hill, and a huge amount of concern about what the Doge boys are doing, whether our information is safe, whether privacy is protected. I had one lady say, in light of what was happening at CFPB, and while there's not a direct connection, she's saying, is her deposits at her bank safe? We tried to give her assurance, but I said, you know what, ma'am, I'm going to be talking to the chairman of the Federal Reserve tomorrow. And with this diminution or shuttering, at least at the time being, of the CFPB, can I tell, I believe her name was Mary, can I tell Mary from Virginia that her bank account is safe?
I think bank accounts overall across the economy are safe. Yes, we've still got deposit insurance at the FDIC, and the banking system is well capitalized and safe.
Well, again, I think the concern was being raised was that the diminution of consumer protections lent her concerns about whether that dollar being safe. Last thing I want to recognize is that there's been reports in the media about the thinness in the treasury markets, the number of additional bonding that we're going to have to do, particularly with so many of these unpaid tax cuts. Matter matter of fact, one of the things that was really striking to me was that yesterday the president mentioned how he was, quote, examining Treasury debt payments for possible fraud, and suggested that our debt might not be as high as possible. You know, we all understand the full faith and credit of the United States is based upon a reputation. If this president were to suddenly say, I'm wiping off X amount of debt because I don't believe we owe it, what kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will defer to you on that question.
So you think it would be, from a Fed standpoint, the President of the United States starts to saying we're not going to pay our Treasury debt, you're going to have no view at all?
I'm not going to comment on things that the president says.
I would like to see us at some point get a stronger answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability to potentially curtail payment of debt, I think would have devastating consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman.
I say study a muscle on pair and how it moves day in, day out has worked and done wonders for me. Yeah, man, makes sense. Try. I wanted shorts. I wanted shorts on. How much have I made so far? I hit break even today. Look, sales and then break even because of the speech that's going on right now. How much is 10K funded usually? With my discount code is cheaper. I'm not sure though. Let me check. Yeah, 10K is $100, but my code will be like $80. But price is flying, fam. I mean, I was bearish initially, but boy. Funded by traders, FBT. Use banks 20. Ooh. No. 4350. Bro, GU's going too high, fam. I wanted the SMT. Nah, it needs to calm down. I can't lie. Like, just it needs to relax, in my opinion. You have to make 13%, so 8%, then 5%. SMT, it's divergence. It's a confluence that I use. Opinions on gold. Gold's a good place to trade. Like, it moves a lot if you get it right. But I've had bad experiences with gold, innit? I probably will go back to trading it, but yeah. Bird flu. Do I use the fib level? Not really. I don't really. I mean, OTE, in a way, I do use it. But price, yeah, I just want it to calm down, innit? Because I think I can catch some nice sales. But I don't know. We'll see. I might be wrong. Your price is flying, fam. Bro, they've been talking for the longest.
Okay, guys, I'm not gonna stay here all day and listen to these men talking it. Right now, I want shorts, but I don't know if I'll get them. Actually, I might get them, but if I'm being honest, that's my time done streaming. So therefore, the aim, the aim is, if I do get in shorts, I will put it in my Discord. So make sure you join it. It's in the chat. I'm just hoping I get this SMT. But yeah, right now, let me show you guys. Hold on. DXY, as you can see, DXY is now at a 2-hour impulse. Hopefully we can hold this level. If we just violate it, then I don't know. I couldn't tell you. I couldn't tell you. Because yeah, if we can hold this level, then we can see a reversal. But yeah, I don't think I'll be on here to. I won't take the trade on live, innit? The trade I took for live was this one. Hit break even, and yeah, rightfully so. Save some money. So yeah. Don't know if I should have taken profit though. I'm not sure. So yeah, you man just join that. But love, I'll be off.